Good afternoon, traders. It's 4:58 p.m. on November 17th, Tuesday. I took my final trade of the day in the aftermarket on Apwc, and I'm pretty happy with the way the trade went. Was like to the T, matched my plan and my strategy, and I didn't do anything that was like outside of my rules, and so it felt good because in the pre-market I really goofed up today. So it was nice. My trade in the market open was good, and this trade was good, so I feel like I'm getting back on the saddle, I guess is the expression. So anyway, so I don't have this on video, this trade, so I'll have to talk you through it because I was in a meeting at the same time. But you can see my orders here, so you know I took the trade and you know all the results. But the reason why I took a trade here on this stock was because it popped up on the top gainers list in the aftermarket. Not just because of that, but then when I pulled it up, I noticed that the volume was pretty high. My criteria now, especially after what happened yesterday in the aftermarket, I kind of got faked out, and turns out the volume wasn't as high really as I thought it was. Is I want to see about 10,000 shares traded on each 1 minute candle in the aftermarket in order for me to even consider taking a trade. Like, I don't care what the pattern is, because otherwise the stops are too wide, like you see right now, because this is later and the volume isn't there anymore. But when I was trading it, the spread was like 1 and 2 cents. So and that's a function of the volume. So anyway, I pulled it up and I saw these two candles were formed, and I saw on this candle 32,000 shares traded on this 1 minute candle. In the aftermarket, that is quite a bit of volume. So, it was looking good. Then I'm watching this pullback, and, one of my strategies is to, let the stock run up and then let it pull back and buy for the break of the 1 minute candle. So that's what I did here. And I got in a hair early because I was like a little bit distracted with the meeting that I had going on in the background. And my textbook entry, since this was the high of this was 267.9, would have been 268, I guess. But you see I got in a tiny bit early at 267, but it's kind of a happy accident. It worked out in my favor. It gave me like a cent extra profit. And what ended up happening was this. So I got filled on this candle. This the 410 candle. Whenever you see like an order at, say, 409, that means that you were trading on the 410 candle. That's just the way it works. I think that's true of every broker. And so I got in, and then the price is going up pretty steadily. Then I sell half my shares at 275, which I was pretty happy with that, because that's an 8-cent move, which is decent. And then it continued higher, and then it got up to the level of this candle here, and then I hit the sell half again. But as I hit sell half, it was chopping down a little bit, so I got sold at 279 instead of the 283 that this was at. Then it continued a little bit higher, but not for very long, and started to sell off. And my strategy is that, once I've taken profit, that if it comes back down to my entry, I get out. That way I'm not giving back any of my profits. So some people don't like to do that, but that's just that makes me feel more comfortable. So it came all the way back down to 267, and I sold, and you could see that it was exactly where I entered is where I exited. So the only thing I lose when I do that is the 2 cents for selling. That's it. So it's technically not a break-even trade in that sense, because although I sold at the same price, I lose 2 cents just for hitting the sell button. So the total profit on that was 22 cents, which doesn't sound like a lot, but it was like a $12 trade. So that's about like a 1.67% return. For a scalp, that's really good. If you watch enough traders on YouTube, even like big name traders that trade with very large accounts, some of them routinely get 0.1, 0.2%, maybe 0.5% return on each of their trades, and they're happy with that. And I'm not saying like I wouldn't be happy with that, but I'm trying to shoot for like at least about a 1% return when I can get it. So I'm happy that I was able to get 1.67% on this trade. And then, what ended up happening as this thing played out is it didn't really go any higher. It just kind of sold off. So I'm glad that I stuck to my plan and sold on my entry when it came back down. And it did come up for a little bit, I guess, over here, but, it's just, that was kind of like a fake out. So now it's down here, and you see the difference in the volume. We're talking about hundreds and the low thousands and stuff, and that's why the spread is now where it is. So this thing's no longer tradable. But anyway, so that's my aftermarket trade, and I'm still red on the day, but I recouped some of the losses. And the loss in the pre-market, it was not a function of my plan. It was a function of me trading like an idiot. So, and not trading my plan. But I guess no matter what, how good your plan is and your strategy, once in a while, because we're humans and we're idiots sometimes, we're going to make dumb choices and trade poorly. And that's what happened today. And, my long-term goal is to make that happen less and less frequently. So if I do that, then I'll be profitable. Every single one of these yellow boxes represents when I broke my trading plan, or I did something against the strategy. So most of my losses are because of that. The red losses are actual losses where, I traded the plan and it just didn't go well, and that's it. But I do want to say, like this one that's like a minus $1.06 here, which is a pretty big loss for me. That was a trade I took yesterday, and I've since modified my plan to avoid trades like that. I can't pull it up right now because I don't remember the stock it was, but it was in the aftermarket. But anyway, what happened was there was like one big candle that popped up in the aftermarket. Not quite like this. It was like, 'cause let's say if this candle was big and then this one was a little smaller, and then I bought in somewhere around here, and then it just immediately jumped down. So that's why I took such a big loss. But looking back, I realized that the volume wasn't that good. Like the highest volume candle was like 3,000 shares. So since then, I've made the rule that I can't take an aftermarket trade in the stock unless it's trading about 10,000 shares per 1 minute candle. And that will keep the spreads down. That'll keep, that big choppiness and all that stuff from happening and creating big losses. So that's it for me for today, and I should be back tomorrow, and hopefully I will stick to my plan and stick to my strategy. It seems like when that happens, sorry to keep you guys here, but whenever you have like a nice green streak like I had here, 6-day green streak, it seems like there's a tendency to start to bend your rules and take riskier trades and do things you wouldn't normally do. So, I think that's what happened here, and I just got to, try to avoid that in the future as much as possible. Otherwise, I won't be profitable. Luckily, I'm still green on the month, so hopefully I can keep that up. So anyway, hope you guys had a good trading day, and like I said, I will see you tomorrow. Take care.